Hello, everybody, and welcome to today's webinar. I'm Terry Ryder, founder of hotspotting.com.au. My special guest presenter today is property investment specialist Danny Buxton of 000 Property. The headline for this webinar says 15 to 20% capital growth before the house is built. You sign a contract to have the house built, and before it's completed, its market value is potentially 15 or 20% higher than the cost of the house and land package. And it sounds like almost like a too good to be true scenario. But our guest presenter today, Danny Buxton, says scenarios like this are far from exceptional in the current market climate. He says there are numerous current examples of this and better in nation-leading growth markets like Brisbane and South-East Queensland, and also in Adelaide. So today we're going to talk about that, give you some good information about how to make that happen, and also provide you with the opportunity to ask questions. And there's no one better to have that discussion with than Danny Buxton of 000. Danny lives and breathes this stuff every day. He probably dreams about it as well. Danny, welcome.
Thank you, Terry, and appreciate the opportunity to come on and talk to yourself and obviously to all those who have tuned in to our webinar today. So a big shout out to everyone there, and especially to our clients who may have also joined along for the listen.
Okay. Well, do you want to go to your slides to kick things off?
Yeah, we'll start off straight away. So yeah. I'll just share my screen.
Sure. And
we'll go straight into it. So obviously, as Terry did the introduction, we're here to talk about understanding how we can generate and manufacture capital growth just through the build process. And we're going to look at some examples of where we've done that, and also just talk about opportunities that we see coming up, and particularly with a focus on South-East Queensland and also Adelaide. For more detailed information about Brisbane, South-East Queensland, our last webinar we did, Terry, was on the impact the Olympics would have, which was about 6 months ago, and encourage people to go back to watch that for more detailed information, which has certainly proved to be on task. So obviously, before we do any presentation, the fine print stuff, the most important thing here is before you do any sort of investing, make sure you do talk to a registered professional, an expert who can give you the right advice, whether it be financial advice with your lending, and certainly talking to a company like ourselves who specialises in that property specialist arena. But also to everyone's situation is different, and today is all about just providing some general advice and giving some genuine, real examples of what we've been able to do. So at 000 Property, just a bit of an intro about us as a company. We've, as a company, been around for 15 years. We're not a big company. We don't want to be a big company. I guess see ourselves as boutique and specialised in what we do. For us, we're very relational, not transactional in the way we want to do our business. So it's all about our clients. We don't hold stock. We tend to go out and find the right opportunities that meet our clients' individual needs. There's not a one-size-fits-all approach. We only do deal in new property, and there's some advantages for that which we'll cover off in this webinar today. Based on the Sunshine Coast, we have done options on the east coast of Australia and are now Adelaide, and just absolutely love, as Terry said, live and breathe property. It's our passion, and very excited to be able to be sharing some of that passion with everyone today. One of the things that we talk about, Terry, often, and it comes up in a lot of the different webinars you do with other panelists, but something, and this is a slide that I've used previously, before you do anything, and particularly in today's market where supply is extremely tight, the ability to be agile and to move very quickly, it's really important that you get your house in order, or as we say, your ducks in a row. So for us, that's always understand the strategy that you're doing. For us, property is a long-term play. It's not just about making quick gains. We always like to, we love the opportunity to get that growth and then utilise that growth to then build one's portfolio. But you need to start with the end in mind. What is the purpose of your investment? Why are you doing it? The why is extremely important in helping you achieve your goals in building a portfolio of property. Having the right mindset, I always talk about being positive, proactive, and taking responsibility. Negative people don't achieve and don't succeed. You've got to be proactive. If we sit still, we go backwards. So we've got to be not inactive, but we've got to be proactive or reactive. We don't want to be reactive either. And so, and we've also got to take responsibility. We can't change decisions we've made. We can't change the past. We just move forward and plan for our future and be wise and careful how we do that. Finance is a big thing at the moment, and it's really important that you really understand where you sit financially. Talk to your financier, whether it be your bank or your broker, and have a really good understanding of where your position is, both now and what it may look like if there is a slight change in rates, which we're expecting potentially at the end of this year. Have a good solicitor. And these people should all be independent from the person who's, rather than saying all in-house, you want independent people doing that, but working together. And we talk about building your team. A good solicitor who understands and who's registered for the state that you're purchasing in, who can give you the right advice. When you're spending $500,000, you want to make sure you've got the right person giving you that guidance from a legal perspective too. And making sure your contracts are previewed before you sign, and just so you're aware of what's out there. Having a what we call a building broker or property broker or strategist, that's what we do. That's us at 000 Property. That's all we do. We research, we source, and then we manage that process for our clients. And again, we're able to get great results for our clients year in, year out because we have that individual focus, and it's really about getting the right option there for each and every client. So that's all about being market ready. So when the opportunity does arrive, you want to be confident and ready to be able to move very quickly to get the right option. Don't panic, particularly in a market where we're seeing prices and we're seeing a lot of media and prices are moving quickly. Don't have FOMO, just be smart with how you do things. A month isn't going to make a massive difference in pricing. The last thing you want to do is buy the wrong property. You can still lose money in property if you don't know what you're doing. You don't get your structure right. Again, talk to your accountant, and make sure you've got a really good property focused accountant on board. So for us, it's about buying smart and really future-proofing your investment, because that's where you're going to see the best growth and to be able to see, I guess, put yourself in a position where you're mitigating as much risk as you can through the purchase. So build your team as you build your portfolio. So Terry, one of the things we talk about is research. Why is research such an important part of our investment journey?
Well, I mean, without research, you're going to probably or possibly make really bad decisions. As I think you will emphasise throughout the presentation, locational choice is so important to get the best outcomes, and that's one of the key reasons why research is necessary. Australia is a very big country, lots of different options. The last 12 months, it's felt like pretty much everywhere showed pretty spectacular growth, but that's not the norm in Australian property markets. What we normally have, once we get beyond these frenetic times, is situations where we have outperformers and we have underachievers, and it's very important for investors to choose the outperformers as locations to spend their money, and that choice should arise out of thorough research.
And look, it's also important for people to understand that there's not just one property market in Australia, and unfortunately, the media often talks about one property market, although even maybe Sydney property market and Melbourne property market or the Brisbane property market, and I'll talk about that, but there are markets within those markets, and it's very important to understand there's multiple markets across Australia, and even in those markets, it sounds confusing, but there are markets within those. So it's about identifying the right areas, for us, estates. Having boots on ground is really important to be able to go out and identify what we believe will achieve and outperform even the properties around even within that estate when it comes to design and that's where research is key. And there's a couple of things on the slide which you can all see there. Looking at that continued population growth and demand, demographics of the area. What are the changes that are occurring? Who's moving into that area? What's the population? What's the need? The type of housing that people are looking for? Infrastructure is such an important part, which we'll cover off in a sec, and following that infrastructure and seeing where that infrastructure spend is going. It's got to be affordable for tenants and for the investor. That's becoming harder and harder in certain areas as markets move. And certainly on the Sunshine Coast, we're seeing that dramatic increase and rental affordability and the pressures that are existing there. So looking at the macro and the micro. Look, hotspotting reports, I can't suggest, there's an unashamable plug here for Terry's hotspotting reports, but it's something that we've relied upon and we look at. I also enjoy reading the Heron Todd White in review, monthly review reports that they put out. A little bit different because it's looking historically, different eyes, but it's good to understand and research. But those location reports are so important, and some of the examples that I'm going to give in some case studies are purely based on conversations that I've had with Terry, and where there's even been a bit of a nudge and a push from Terry to go, hey, Dan, I really think you need to look at this as an area for your clients, whether it be Ballarat, where we've looked at stuff in Ballarat, and South Side in Gympie, which is more recent. So let's have a look at some examples and some case studies of where clients have been able to build for profit. So this was actually an option we did a couple of years ago. It actually completed in November 21. A client purchased this property for just under $550,000 here on the Sunshine Coast. Peter and Anna, this is their second house. Peter's a teacher. Anne works as an administrator in hospice care for kids. They purchased this property. It was completed in November 21, so just recently, just last year. When we looked at it, we had a rental appraisal of $525,000. We believe there was probably around about between $60,000 to $80,000 uplift that we saw in this property through purchasing this property, but it's now been valued at $770,000. So through the build process and then after completion, there's been a $224,000 uplift. That's nearly $250,000. Rented straight away, amazing rents as well, and they continue to grow. We initially thought about $525 a week, but on the Sunshine Coast, there's a massive shortage of rental properties. We've got a population that's growing, which we'll talk about. But unfortunately, new developers and new developments are releasing very minimal stock to investors. There's a real push for occupiers, which everyone's crying and jumping up and down about affordable housing and affordable rental properties, but properties are not releasing enough land for investors to be able to build those investment properties. So again, a great example where we just saw a 41% increase or uplift from going to contract through the build process and completion. Terry, we talked about Ballarat. I don't know, was it 3 years ago, 4 years ago, we started looking very carefully at Ballarat. I'm in two minds of where Ballarat's going. There's talk if Victoria gets the Commonwealth Games, it's going to be held in Geelong, Ballarat and Bendigo, which are three areas that we've really focused on for clients. This is actually, both of these are all clients' properties. This one was completed 18 months ago. Rented for $460 a week. The rental hasn't grown a huge amount. We expected around about a $55,000 increase in what we could see in valuation from contract to completion. Clients just had a valuation done at $720,000, which is a 60% increase in value from purchase in just in under 3 years. A great result for them. And we're just looking to see what's going to happen there and the continued potential growth. that's going to be experienced in a city of itself that's really matured in its own right. Not just as a satellite city of Melbourne, but in its own right. I don't know if you have anything else to add on Ballarat.
Look, it's been a great performer for 3-4 years now. The national property boom probably started, you could say, mid 2020 and really picked up pace in 2021. But there are some locations in Australia which, for local reasons, have been on a growth path for much, much longer than that. And Ballarat is one of those places. It's been boosted by buyers out of Melbourne. That trend, which we call the exodus to affordable lifestyle, it's been underway for a number of years. Melbourne's been losing population to the regions for the past 5 years, and Ballarat's been one of the major recipients of that. Attracted by, it's a great city. It offers pretty much everything that most people would want in a city. It was so much more affordable than Melbourne, and it's also very well connected to Melbourne. So it's got all those reasons why it would attract buyers and why it would have price growth. Long term, I think it's going to be a great performer. Probably the sales activity figures tend to suggest that it's, perhaps in this cycle past its peak, but people who buy there today are going to long-term get good growth still, because I think it's got the credentials to be a very good long-term performer.
And there's still opportunities to pick up properties at a lower price than this, but and to build, but just great, again, for our clients, got the ability then to use that equity to then go out and purchase another property. So there was a police officer who went through that. So again, these are just everyday Australians who are investing and are able to create significant wealth through that process and then be able to duplicate. This is a property we actually haven't handed over yet. We're about 2 weeks from handing over this property. So 12 months ago, we put this package together for some clients. We've actually got a number of builds in this estate, and the estate that we identified where we saw a real opportunity. The package at the time was $439,000. We had a rental appraisal of $440 a week, which we were quite confident of. Although we said to our clients, just work on $400 a week, and if we get more than that, that's great. Well, we've actually achieved a $625 a week rent on this property, with application already being submitted in preparation for a handover. That's a nearly 7.5% gross rental yield, which is just sensational. And the vacancy rate there is almost non-existent, because there is just no properties available for rent, because the demand for that affordable rentals in that area. Growth, well, we said, and we expected around about $80,000 worth of growth, and that was our expectation in looking at that option for our client. Well, it's now valued at $680,000, and that's in 12 months. That's a 54% increase on just through the build process. And that's happened by a number of factors. Obviously, we've seen that growth across the board, but also being able to manufacture growth. Building is, and which we're going to talk about in a moment, is a real challenge for a lot of clients, particularly with the cost increases and the pressures that both a lot of builders are under. And it's something that a lot of people don't want to do. So that also further adds to the demand. But we're very excited. We've got some very happy clients who are already talking to us about the next option as soon as we hand over their properties. But I have to give you credit here. This is one that you encourage us to really look at. And it's hard when you live in an area like for us on the Sunshine Coast. Sometimes you can be a little bit too close to an area that your views can be a little bit negative and not have the right idea about it. And you've really got to push those personal views aside, really look at it from what is going on and the rejuvenation of that area, and not just the residential, but the commercial precincts that are growing. I've personally purchased in Gympie region, so it's an area that we're very excited about.
Yeah, it's been a great performer, and for very clear reasons too. I mean, it's a little bit north of the Sunshine Coast. Its connections to the Sunshine Coast are important because it's affordable alternative, and it's a place that's got a lot of credentials. It's got its own lifestyle. It has in the past been a little bit stigmatized as being a down market place, but it's sort of transcended that in recent years. And it's a place, the Gympie local government area includes sea change towns, lovely sort of hill change areas, beautiful countryside, and the town itself offers a lot. And so we've seen a lot of demand go to Gympie for people who found perhaps the Sunshine Coast a little bit expensive. And it's a very good alternative that's more affordable, and we've seen that in the price performance. One of the things we note is that whereas the Sunshine Coast has been on a growth path for say 3 to 4 years, and we're starting to see perhaps a drop off in sales volumes in some areas, Gympie is still rising. The sales activity figures for Gympie are still just going up and up, so it's still being targeted. And so we do expect further considerable price growth in that market going forward.
And this certainly has outperformed our expectation. But I guess the biggest challenge we have at the moment now is just supply of land. You're probably, nearly almost 18 months out from the next lot of land throughout all of Gympie region that's available for development. So, which has also added to that significant price, because supply and demand plays a big part. But the highways has had a big impact on that. It'll be great once in the next 18 months, 2 years, when the bypass is completed, which will then take some of the heavy traffic that goes through town out of town.
So that's a multi-billion-dollar enterprise in, I think, 3 stages, upgrading the highway links between the Sunshine Coast and Gympie. And the third and final stage is the one that you're referring to, Danny, which is the bypass. But collectively, it's really had a massive positive impact for Gympie by making it faster to get between the Sunshine Coast and Gympie, and also easier to get through and around it.
And it's just a lifestyle factor that is really, we've actually got clients who we're looking at as an investment that have actually turned around and said, we actually want to move here. We just enjoy the larger lot sizes, the feel of the township, the changes that are going on, particularly in Southside. And so it's been very beneficial for us and our clients. Our final one is just one we've just recently pulled together late last year for a client. Total package was $650,000. Our current rental appraisal is $650 a week. We're already seeing that probably nudge a little bit higher. We then expect, so a gross rental though of just over 5%. Again, vacancy is less than 0.5%. Anything that we're doing in this area here, we have multiple applications prior to completion, and we're normally advertising through our rental. We're getting applications 4 to 6 weeks out from completion, and a very strong, but really strong capital growth. We now see that at $780,000, which is a $134,000 increase, which is a 20% uplift, and the land hasn't even registered yet. It's due to register in April. And that's looking at comparable sales that are occurring there and then just around the corner. In fact, this is a 2-story, 4-bedroom, double lock-up home with big upstairs rumpus, with ducted air, bits and pieces which the clients added into this. A property has just talking to a local agent, has just sold around the corner on a small block backing onto our main road it's a 3-bedroom, single car, single living, about 160 metres squared, and it has sold for $720,000 and literally been put on the market straight away. So it just shows you demand, again, partly because there's just such limited supply on the Sunshine Coast. And I think that part of the reason why sales, and talking to a lot of agents on the Sunshine Coast, I can't tell you how many letters I get in my letterbox because we have properties on the Sunshine Coast. Of literally every mail run, I'm inundated with, do you want to sell? Do you want to sell? We're desperate for property. And the biggest challenge on the coast is for people selling is, where do they go? If you sell your property, what are you going to buy? And properties are buying far above people's expectations or understanding. It's very hard for us to put a value on a property at this stage with such an aggressive market.
Danny, just to clarify for people who are watching and listening, when you say that the package cost X and now it's valued at, the value, the establishment of the current value, is that through comparable sales in the neighbourhood or an actual formal valuation?
Yeah, two things. This one here is through comparable sales in the area, and then going and then sitting down with the valuer and then understanding where does this sit. So obviously with a client going through their finance process, the bank has actually valued this property above purchase price, although not as much as this, because obviously it's just for lending purposes and they just want to make sure that it stacks up, which it does. But when we look at what's on the market, what is selling, we're seeing significant number of properties well and truly over and above, and certainly in this sort of price bracket. So we're very confident that that's where it sits. In fact, we've had clients come back to us with valuations of $800,000 on similar properties from their banks that we've already completed.
Okay.
So why build? Well, for us, there are a lot of benefits for building. As you can see, there is some real examples of where we've been able to manufacture growth through the building process. Building a house is very stressful and can be very challenging for a lot of people, especially if it's not something that they are familiar with. And so that also assists, and people do like new. But this is a quote that we've used, and I'm not sure where it came from, but it's so true that the direction which property values travel is only partially dependent on the broader market conditions. That all important 6% comes from factors, and this is where it comes to the location, the style of the houses, design inclusions, and the income and demographics. So it's all about the research of understanding the area, what's going on in that area, and then ensuring that the design of the property that we're putting together meets that demographic and the needs of that area, which then allows us to maximise our growth in the property. Actually, one of our happy clients. But one of the benefits of investing in new homes is obviously we get increased rental demand and rent. Tenants do tend to like new property. I think at the moment, though, to be fair, I think most tenants, particularly on the Sunshine Coast, for example, we're talking about the Sunshine Coast, will just take whatever they can get. We get increased rents, especially when we're designing based on those demographics that we just talked about, and just no maintenance issues. But we also get increased cash flow through our depreciation, which I know you often have Peter on the panel, and he talks about that from Washington Brown, and the importance of getting that depreciation schedule, which really helps manage your cash flow and ensuring that you're putting yourselves in the very best situation. So we've got that real positively geared property. And so we manufacture growth through the build process. But choosing the right builder, particularly in the current climate that we're in, is now more important than ever before. And it's a daily conversation that we're having with our panel of builders. We used to have a larger panel, and that panel has shrunk over the last 12, 18 months due to a lot of the financial challenges that are occurring in the current market. So there is, just talking to a builder this morning, 3 price increases that they've been hit with, effective immediately on current builds, whether it be concrete, steel, and door handles, I think it was. Windows was last week. So there's almost weekly cost increases that are occurring. And this has an impact to people who are building. So you really got to make sure that you have the right contract in place, that you're protected as best as possible through any of those potential increases and how they're passed on to you. Land supply is a massive challenge, and registration delays. We've got a couple of states there where registrations have been pushed out. even one of the big players, where properties were supposed to register late last year, and you could almost set your watch by the developer. And for the first time in 15 years, I've seen this developer push registration into the next half. And part of that's also been impacted, particularly in South-East Queensland, because we've had significant weather events, as we're experiencing today, with just lots of rain. And heavy rain and large amounts of rain does impact developers with the heavy machinery being able to do work, and the ground needs to dry out to a certain point before they can get back on site and do the works that they need. So it does. And registration delays pushes our price. In fact, I've got a quote here from the HIA, which says, the constraint of home building is not just demand, but also the availability of land, labour and materials. The shortage of labour and materials has led to construction timeframes increasing, but also to the volume of approved but not yet commenced work is at its highest level in over a decade. Part of this is also to a follow-up from the home building boost, which really put a huge amount of pressure on the building industry, which has led to some of the shortages of materials, which supply of materials is a big thing. And then obviously COVID has also played into that as well.
So Darren, just touching on that point about cost escalations and the importance for the consumer to have the right contract to protect them from the impacts of those cost escalations. But there are also impacts on the builder themselves. And we're seeing instances almost daily. We're seeing media stories of builders actually going broke in this time of boom. How do real estate consumers, the buyers, protect themselves in those instances? Because nobody wins when the builder goes broke.
100%. And that's actually going to cover that right now, because the key driver in insolvencies is cash flow. And it's a major problem. I think, in fact, the bottom quote there says sharp increase of bills into external administration. ASIC suggests a 38% increase this year. We believe it's going to be much higher. We've already started to see some big builders, whether it be Privium or B.A. Murphy, for example, two builders here in South-East Queensland. There's been builders in Tasmania, builders in Adelaide. I think Showerama, which is a supplier as well, it's not just builders, but supplier of materials. Showerama been around for 60 years, just going into administration, I believe, which I read yesterday. So there's it's a massive stress point. As one of my builders officers says, it's a daily punish every time he comes into work and opens up his emails to see what next. So for us, it's really ensuring, and I'll go to our next slide, when you're talking to your builder, you need to understand their financial position. How cash strong are they? So for us, we'll only deal with builders that are in a very strong financial position, that can weather some of the storm, that are aware that if they are going into a fixed price contract, that they would adhere to that. Obviously, we need to have conversations. If land gets pushed out beyond a certain time frame, then we need to sit down with both parties just to see what that exists, because that's at no fault of the builder when they've done their estimation, their quote, but also too when registration has been extended significantly beyond when their registration date is. There's real cost impacts, and it's in nobody's interest for a builder to be in building for nothing or building at a loss. But you also need to understand the quality of that builder and the finish. Unfortunately, we see a lot of people trying to chase because prices have gone up, and we've seen a significant increase in build costs over the last 12 months, probably close to 30%. A lot of people are now chasing the cheapest build. Now, you chase the cheapest build, you're more than likely going to end up being a statistic and your builder being on the front page as well, because there is a true cost to build that property, and you need to make sure that you're very familiar with those costs that are incurred.
So, Danny, for the consumer, you're suggesting they need to check out the financial status, cash position of body. How do they do that? They need to talk to somebody like yourself, perhaps, because I imagine that would be difficult for the average consumer to do.
Yeah. No, I don't think many builders will open their books up to a mum and dad investor or builder, because we have that volume and we've got that relationship with the builder. We have regular conversations with where they sit. Obviously, you should always do a license check, and the QBCC, for example, in Queensland, is a good place to start, where you can understand and see how many current builds that they've been building. I always think it's really good to look at the history of a builder and just look at their growth trajectory. I think any builder that grows really quickly is a bit of a red flag and a warning sign. Whereas for us, we like builders who tend to have systems in place, have been building roughly about the same. Now, one of our builders, they just build 100 homes a year. That's it. Year in, year out for the last 20 years, 100 homes a year. They're in a strong position financially. They have no debt. We often joke that, well, they have a lease on a photocopy, but they have no debt. They're money in the bank. So they can weather a storm and they can carry some of those costs on behalf of the clients and manage that process. How long have they been in business? What's their build footprint? Are they going and extending beyond that footprint, which is then creating further external pressures that will then create financial difficulty for that builder? So these are all the important things to understand. But also when you're looking at your build contract, and we did this exercise for a client of ours and actually yours, Terry, just recently with Belinda, and we're sitting down with her and looking at another build contract and what wasn't included. So it's not just what is included, but what's not included in your quote or that's been presented to you to ensure that you are getting what you think you're getting. And so it's very important. And I think more importantly than ever, if you are going to be building, that you're working with an organisation like ours that's got the history, the background and the experience, who not just talks about it, this is what I do, this is how I invest, I build with these builders myself. And so understanding that process, have the relationship with the builder that we can help navigate through some of these challenging times on behalf of our client to protect them, first and foremost, but also too, you want to ensure that your builder is protected through the process as well.
Just on that general topic, there's a question there from Rob related to, you've sort of quoted the cost of house and land packages to compare with the subsequent value. It's just asking whether that package doesn't include legal costs, reports, stamp duty, etc., or what actually does that figure represent?
So it actually includes the land and the construction costs. It doesn't include your stamp duty. So stamp duty is obviously, one of the great things about building is you only pay stamp duty on the land only. So you're not paying stamp duty on the total package. So there's a significant saving that one receives upwards of $10,000 just in your stamp duty on the land. Yes, you do have holding costs during the construction phase, but they are capitalised costs that you can claim, but you're still up for your legal fees and stamp duty. We would suggest to a client just allow around about $15,000 to $20,000 for those costs, including your holding costs as well.
Okay.
But it certainly works out cheaper than what you would be if you were buying something complete. But then also if you're buying something complete, you're paying the uplift that the client's got through that process. And that's where we want the uplift being technically, even when you're building building investment property, you are to some extent a developer, because you're developing that block of land from a vacant block of land into a property with a house on it. So we've talked about why you need the right sort of builder. We talked about some of the challenges that the industry is facing, and it is in over 15 years of working in this industry with clients, it's probably one of the biggest challenges that we've seen that builders are facing. There's always issues, and we've always very wary of opportunities where builders can get into financial strife, and that's the last thing you ever want a client to do. And so cash strong builders is absolutely imperative. but so too is choosing the right location. And so that coupled together really gives best bang for buck for our clients. And obviously, where now? And obviously, one of the big things we talk about is infrastructure. And I know, Terry, you talk about infrastructure a lot, and maybe you'd like to elaborate on this a little bit more and why we should follow that infrastructure spend.
Yeah. As you say, getting the location right is so important, and there's so many options in Australia, and it's quite daunting. In fact, the word I often hear from property investors is overwhelmed, because they're just trying to narrow down all those choices in Australia to a short list that makes some sense according to their criteria. Is quite difficult for people. But when it comes to recommending a location and hotspotting, we're very much driven with what's happening in the local economy. I think you made the point earlier that it's what's happening locally that's more important than what's happening nationally, in terms of right now we have a national property boom, and it feels like you could choose anywhere and get growth, but you really should be taking a long-term view. And once all the hubbub is over, will the location you've chosen provide the long-term growth that you need? So it comes down to looking at the credentials of a location to produce growth, because we believe that property markets arise out of local economies. That's our fundamental belief. And so you want to look at that local economy. Is the population growing? Is the economy growing? Are jobs being created? And one of the essential factors in all of that is the infrastructure spend. And we've seen markets being absolutely transformed in terms of their property market and their appeal to investors through a big infrastructure spend. The Sunshine Coast, you're currently sitting down, is probably the best example in Australia right now, with a $20 billion plus infrastructure spend has transformed that economy from basically a fragile tourism economy into a serious regional city, one of the most important cities in Australia now. And that's been achieved through transforming the economy through infrastructure spend. That's a big factor that we look for. Infrastructure not only improves the amenity of a location, but it generates so much economic activity, and that creates jobs, and out of that comes demand for real estate. So it's a fairly simple step-by-step process to understand how big infrastructure projects deliver for property markets and the people who own real estate. And
look, 100%, and I think understand those infrastructure projects that are occurring, and understand that what locally is going on is so important. Having boots on the ground and looking at those areas. Before I talk about a couple of those areas, it was interesting. I did some numbers, and if we look at Sydney as the, I guess, the benchmark, is in the highest medium value, and often we're compared to Sydney. Melbourne traditionally, at its last peak in 2010, sat at about 90%. Brisbane in 2008, after the initial growth in 2001, 2, 3, and then in 7 and 8, sat at 78% of the Sydney market. Adelaide in 2011, 71%. Previously, it was 78%. And just, again, not saying, again, it's just looking at the numbers and considering, well, where do we sit today? Well, you've got Melbourne at 1 million. If you look at where Sydney sits now, potentially at its peak, you could say there's still wriggle room of around about 20% of growth that could still happen in Melbourne. And we're just talking about the capital cities here. We're not talking about the regions, but just looking at the capitals as an example. In Brisbane at $800,000 with some wriggle room, they're up to about 30+%. Although I do think we need to remember the impact of the Olympics and the massive infrastructure spend that's happening in South-East Queensland and greater South-East Queensland. And certainly experts far smarter than I am believing that's going to be higher than that. Adelaide, though, look at that wriggle room there of over 50%, where the medium house price across Adelaide. Now, again, this is the broad medium house price. We're not looking at the local different areas. There's a 55% uplift potential that through its growth trajectory. So when we look at those two areas, and look, I was in Adelaide last week, driving from north to south to west. Can't really go east because you're stuck there with the east, not west, because you've got the ocean on the western side. So I did just under 500 k's driving around talking to local agents, to builders, to developers, to even to shop people in the local industries, and understanding what's going on in those areas. And it's very exciting to see what's happening there. Obviously, South-East Queensland, and I think South-East Queensland speaks on its own, obviously with the Olympics, the infrastructure spend that you just talked about, also on the coast, which I'll look in a little bit more detail. The migration, the affordability and lifestyle. I just picked up, just before we went on to this webinar, a potential option for a client, and I've already received the message that because I'm on the webinar, I can't move on it, and that property's now already sold multiple times over. And getting those options, particularly in a market that's really growing, that ticks a box where we see that opportunity there, well and truly below that medium, it presents a challenge. Adelaide, supply is not as restricted as it is in South-East Queensland at the moment, although we see that becoming an issue. A lot of the estates, like in Brisbane, really big on owner-occupier presence, not investor presence, which does put additional challenges on rents, and rental affordability, because there is a need for rental properties. But Adelaide itself is often overlooked and really has matured as a city. It's really become a bit of I don't like the word, but the Silicon Valley of Australia, with a massive amount of government spend. You've got that north-south arterial, I think it's about a $2 billion upgrade that's going through, which the one thing I love about Adelaide is just the ease of driving. And no tolls, which is great, no toll roads. But it's very easy to go from Gawler, either jump on the train or jump in your car, and within 40 minutes you're back in the middle of the CBD. And the same with the south, with the South Road upgrades there. And I mean, I used to live in Adelaide as a kid, and it's just amazing, just the changes and the differences that I see. Areas that are on the east, areas like Stirling, Mount Barker, areas that, a lot of attraction, because it's giving that, not in the city, but you're in 30 minutes. As I flew into the city, the guy next to me on the plane was heading home to Hahndorf, and he commutes regularly to Melbourne, and he was telling me, it's only 30 minutes for me to drive from the airport to Hahndorf, which is just incredible. And again,
you're referring there to the Adelaide Hills.
Adelaide Hills, yeah.
Which is a hill change area. And I've always been a big fan of the Adelaide Hills, because it's, apart from the lifestyle, it's, some beautiful towns up there in the hills. But it's so close, as you point out, to the centre of Adelaide. It would be, in capital city terms, the closest hill change area to the CBD of a capital city, and so easy to get between one and the other. And that's one of the attractions of that area.
And the past of Adelaide has always been very much an elongated north-south, and there's been a lot of stretched north-south. But now people are going, hang on, I can just jump into, and when you see what's going on in Mount Barker, it's incredible. Places like, if you go north, if you go up towards Gawler, which is like obviously Everston area there. If you look at Buxton, which is right next to the highway, you can jump on, and within 30 minutes you're in the highway. There's a massive housing estate there with huge amount of infrastructure coming through. In Riverlea Estate, you go south to Seaford Heights. A bit harder south. There's a lot less opportunity on the south with development, but certainly that push north, particularly with also all the jobs that are occurring on the north side of the city. Very, very compelling opportunity there, particularly for people who are looking for that affordable investment, but within a capital city. And I like Adelaide because it is a capital city. You've got multiple job nodes and employment opportunities. Vacancies super tight. There was an article I read this morning, which was, I think, in the Australian, which was actually talking about, I think it was the Australian, which was actually talking about Adelaide and Brisbane, talking about just the massive shortage of rental properties and the vacancy that exists, and the demand, and the pent-up demand in those areas.
Yes, time marches on, so moving
really
forward. So I'll allow some times for some questions as well, because there's lots of questions coming in. from people?
Very quick, Sunny Coast we've talked about it previously, and obviously everyone can read those slides there without me having to talk through that. Second highest performing residential market in Australia, according to CoreLogic, behind the Hunter Valley, which we had clients do very well out of the Hunter Valley last year. Very tightly held rental market, massive undersupply. It's suggested that Sunshine Coast needs a new suburb every year to be built and completed for the next 2 decades to keep up with demand. And it doesn't matter how many trucks are on the ground doing, cutting up land and putting all that infrastructure, that demand cannot be met. And so it makes it very, I've gone back one too far. So let's go into some questions, Terry, and we'll go from there.
And you've got a special offer for people watching and listening today. We can finish off with that. So there is a question saying, if a new investor like me wants to invest in Brisbane, or some of the other areas that you're mentioning, and they want to go through 000, what to do and how can you help?
Yeah, look, best thing to do is, which is probably a very last slide, is just drop us an email. Just contact us at invest@000property.com.au, or just Google 000 property. And on our webpage, you can fill in an inquiry and I will give you a call and we'll have a chat with you to understand what it is you're trying to achieve and whether we are the right people to help you through that process.
Okay. Mandy is asking a question. Do you find that investors are pushing for environmentally constructed investment properties, solar panels, double glazing, etc.? Is that increasingly a requirement from investor clients?
Yeah, look, we're starting to look at solar as an opportunity, as something there in our properties, although it has more of a benefit to the tenant. But it's a double-edged sword too, because we believe that it's going to probably become a requirement through energy efficiency changes and legislation with new housing, certainly here in Queensland, whether the QDC or the QBCC require that to occur or not. But look, sustainable practices are always very important. One of those sustainable practices is a property that's built that's going to last, be built and stand the test of time, is also a sustainable build.
Yeah. There was some research a couple of years ago, I can't remember the source, but I do remember the finding was that houses with environmental features, environmental friendly features, do tend to sell at a premium, and they sell for a high price. There was some research supporting that.
So in every design that you look at, you need to make sure that the house is designed right to maximise those things too. And even the design makes a big part and plays a big part of getting that energy efficiency and that sustainability, with ensuring that it's facing the correct way, you've got your living areas in the right way. All those factors play a big part of that process.
Okay. I'm sure he's asking about your fees for house and land packages, etc. I would probably suggest that the best, it's a conversation to have with you, not during the webinar, but later, and that participant perhaps follow up and contact you later, and you can sort of talk through all those issues. I think we've answered that question. Belinda's just making the comment. I'm currently going through Danny at 000, and he's been amazing. I would recommend him. Thank you, Belinda, for your comment. Jessica saying, what are the buyer's options when the builder raises the building contract price in the middle of the build? I think she's talking about price variation sort of clauses.
Yeah, that's why it's really important that you've got someone like us who can go through the contract and really give the right advice and ensuring that you're protected during that process. Look, once you're under construction, you've got commencement, you really don't want to be sitting there having a conversation where your builders turn around and saying, and we're seeing this happen a lot outside of our clients, and clients coming to us going, hey, I'm building with XYZ. I've suddenly got a $30,000, $40,000 increase halfway through the build, and we don't know what to do. And all we can suggest is go back and talk to your builder. Make sure your contract is checked, that there's not provisions that allow the builder to do that. But also too, we see that where a lot of builders are selling packages at a very cheap price to get the build, knowing full well that there's going to be cost variations that are going to occur along the way, and they've structured their contracts in such a way which allows them to add those in. So it allows them to secure the contract, secure the build, but then at the end of the day, the person that gets hurt at the end of the day is the client who's going through that build process.
Important to get those contracts checked over by an appropriately skilled solicitor. I think that would be a must. It's true of any property purchase, but perhaps even more so for a build contract. Dan Marv is asking, what is the typical project time frame of the examples that you provided from buying the land to handover? It's probably a little bit hard to be definitive about at the moment, but nevertheless.
Well, certainly Adelaide, yeah, your typical build times for a single-story house is around about 9+ months, which is a lot longer than what we're used to in Queensland. Queensland initially would be probably about 16 to 18 weeks, probably seeing that probably push out to around about 24 weeks for a single-story build. Two-story, probably add another 10 weeks to that. From settlement on your land, unfortunately, we've seen a lot of builders who've secured contracts too, where people have bought the land and 9 months later or 6 months later, they're still waiting for a start. Again, there's additional cost to the client during that process. And a lot of the time it's because the builder is unable to build or get materials, or that the cost has gone up such that they're hoping that the client will then terminate the contract or renegotiate.
Okay. We've got a question from AB saying, do you ever consider new apartment purchases, or do you recommend only sort of new house and land packages?
A great question. Yes, we do look at, we've got some clients doing some townhouses. We are looking at, for a couple of clients, some units that are specific to their needs and location. I just need to be aware though, when you're buying those, they're off the plan. You are waiving your finance. A lot of that's part of a requirement prior, and it could be a 2 year, 2 years from now before, let's say you're signing something now that's got to start now. It can take 18 months to 2 years, but you're already unconditional right from the word go. So there's some added risk there, but again, if you have the right people there, you've got your finance and all your ducks in a row that we talked about right from the beginning, you're okay.
Philip is asking about the sort of price range options available in Adelaide.
Yeah, look, depending where, again, everything's all about where and your location. So, look, the north of Adelaide, a little bit cheaper in certain aspects, certainly around that 500,000 or under. There are some areas there you could probably do. We've looked at some some small terrace type housing, sub 400. There's actually an option I just missed out, as I said before, in Brisbane for $500,000, which I thought was fantastic pricing. But if you go up in the hills, probably a little bit more expensive because the land, it all comes down to the land price and then the size of the house, and then depending on that area with what sort of design we believe is going to maximize that growth, maximize that rental return, and also working within your affordability as well. But certainly 100,000 cheaper than what we're seeing in Brisbane.
Dilip's also asking, is buying new better than old? I mean, I know it's a very broad question, but you do specialise in new builds. Is that because you fundamentally believe it's a better outcome?
No, old can have its place. It just depends on what is the purpose of you buying that particular property. If it's I've bought older properties, and the whole purpose of doing that is to knock down and split that block of land or develop that block of land. For me, I love to build. It's what I do. Just need to be very wary that renovations are even more wrought with danger. There's significant costs. We've just done a massive renovation on our house where we live, and more than double what our initial expectation was to complete that property. But then we're emotionally involved in it too, which doesn't help. So if you're very hands-on and you're happy to put your own time and energy into it, I think there can be benefits there, but not what we do.
He's asking, do you buy development sites for developers?
No, we tend to work with the developer. If they've got a site which we like, we're happy to say, hey, look, we're happy to present that to our clients, which probably answers the question someone asked about what do we charge? We don't actually charge anything. We get paid by the builder as a brokerage fee, the same way that a finance broker is paid by the bank. So if we can get a great result for our clients, then our clients are going to come back into another property, and it's just smart business. But again, looking after our client throughout that process.
Okay. Just zipping through quickly, various sort of comments from people. Vita saying, thank you for a brilliant webinar. Teresa, thank you for an informative session and for sharing your knowledge. Rob says, sorry, I have to leave. It's been very informative. Now, David is commenting, I think referring back to discussion about making sure you get a builder that's going to be around for the process. You need to choose a builder that's been around for a while. Get an expert like 000 who has experience in building development. Jessica, I've heard that land registration in South-East Queensland has been pushed back month after month. Builders have no choice but to raise prices. What are the reasons behind these huge delay in land registrations?
Well, a number of things. It can be council, can be, for example, I know with one development, it's Unity Water. At the moment, weather is playing a significant impact. But because there's been so much activity, there's just limited resources with your civil contractors doing a lot of that work. So if you've got a big developer like Stockland, they're at absolute capacity. And, you know, for the first time I've ever seen, they've actually pushed, which I alluded to earlier, settlement out from when it's normally expected. And you could normally set your clock to when they expect registration to be done. But it's, you know, I think we did a webinar about a year ago called The Perfect Storm, or about 18 months ago, and there has been almost a perfect storm in the other way with weather events and cost escalations, which have made it very challenging for builders. And that's why it's very important you've got the right builder there who can support you in that process. And it's our job to provide that advice and support and to hold our clients' hands throughout that whole process. Not just here's the option, but we're out on site regularly, talking to our, you know, giving clients updates, knowing that our clients are all over Australia or international. We're going to be jumping on and doing FaceTime or Zoom with the clients on site, photo updates, and managing and holding their hand through that process. So it's to take the stress out of that process is what we're about.
Darren says, great seminar, full of helpful information. And Daniel says, I'd like to chat about this being a buyer's agent dependent on my client's position. I'd love to work with 000 to achieve the best for my clients. Look, I think we do need to wrap things up. We've just gone past the hour, so we'll just finish up, Danny.
These are all paid comments too, by the way.
I would suggest that, you know, Daniel, that you follow up after. We're about to put up the various ways you can make contact with Danny and 000 if you'd like to follow up. So perhaps you could just wrap it up with the special offer and the contact details, Danny.
Sure.
And,
so anyone who works with us who's come from Hotspotting, mention Hotspotting. Once we're going through that construction of that property for you, we'll provide a 12-month subscription on your behalf, valued up to $2,000, which is a premium gold membership, and we'll organise that and pay for that. Because we just think knowledge and education is absolutely paramount through your build process, and no better than working with people like Terry. I do recommend too, people like some of our clients have had sessions with you, Terry, just talking about the strategy. Obviously, we're happy to talk about our side of things, but having independent advice, of which Terry is too, but just helps put you on the right trajectory. So, look, by all means, you can contact us. Look, the best way is to either shoot us an email or jump on our webpage and fill in the form, and that will then allow us to contact you. As we've only got the one phone line. We're a small business. We love what we do. We love our clients. We love seeing our clients succeed in that process and manage that process for them. But that's how you can get in touch with us, or contact Terry, and Terry can also, through Hotspotting, be able to pass on our details as well. I'm happy to send clients a copy of our presentation as well. If they so want to, just shoot us an email asking for that, and we'll send you a copy of the slides.
Yep. And I should also point out that everyone who has registered for this webinar, will receive a recording of the event, because we do find that a lot of people register but are unable to attend live, but they like to have a copy so that they can watch it when they have some spare time. So thanks, Danny, for a great presentation. I'm not sure that I've ever done a webinar. We've had so many people commenting, great information, thanks, very informative. So I think that's a reflection of the fact that your presentation was chock full of good information. You didn't gloss over the difficult bits either. You spoke about all the aspects of going through this process in a very upfront way, and I think people appreciate that. So thanks, Danny Buxton of 000. If anybody would like to follow up and make contact with Danny and his organisation, if you're interested in going through this process or if you've got further questions, please make contact through the various options that are presented on the screen. Thanks, Danny. Let's do it again soon. Yep. And yeah, it's I think it's been a very informative and interesting webinar. So thank you for that. And we will do it again later in the year.
100%. Look forward to it, Terry. Thank you very much. And thank you everyone for listening.
Okay. Bye for now.